I bought above this bar, consecutive inside bars. Stop down here because it's a tight channel, um, 6 bar bear market channel. So I thought because of the buy signal, a good bull bar, and decent context, I thought it was worth it to buy. But it's also possible that this reversal has to test down one more time. So if we go up big, if we go up high enough for a scalp, I'll take it at 20 cents. Um, but if we don't go up here, I'll look to buy more lower. I have an order to buy 10 shares above this second entry, and if it triggers, I'll move my stop below the signal bar. I have my profit order at the high of this bar. I'm expecting a minor reversal to tight channel down, so I don't think it's going to go all the way to a new high. I'm just considering exiting here at the high of this bar, or if I should be looking to exit at my initial entry up here. So I wonder if as soon as we get there, a lot of traders will just sell out. So I don't know if we're going to sell off from this high or if we'll get all the way up here. So that's what I'm trying to decide here. Okay, I will exit at my initial entry, so I move my target to 65, which is just above this bull bar. I got stopped out there. $7 loss, but I think that was an okay thing to do. I don't see anything wrong with that entry. The first one, I gave myself room. Second one, second entry by micro double bottom. Thought it was reasonable. The only thing I can see here is that maybe that because we didn't go up for 2 bars, that would be unusual. But other than that, I think it's a reasonable entry, and it looks like there were a lot of stops right where mine was. So I do think that's a reasonable trade. The other thing I just thought of is this happens to me quite a bit. If I feel like I have a reasonable entry and then I get stopped out, it just accelerates down like crazy. So I think if I get more experienced, I've heard Al talk about this a lot, that could be a reverse. So you're in a good position and it stops out. It's after a second entry, it probably means that we're going down for some kind of measured move. So in this case, when it accelerated down, that could be a reverse position or sell because a lot of traders would be trapped up here. But yeah, pretty big loss, $7, but I'm happy with that trade. I think that was an okay thing to do. I bought the low of yesterday after the consecutive climaxes. I'm going to give myself the benefit of the doubt and say that it wasn't a revenge trade. I don't think I was taking it only because I lost. Maybe I was. I don't know. This is something that I think is a reasonable trade after a 1 bar final flag and it's a second climax down. So I think it's an okay thing to do. But obviously, given that I lost this initial trade, it makes it a lot worse if I lose this. It's only on half size, but still, it's not going to end well. If I lose $5 here, that's 7 and 5, so 12 total. It's not terrible. It's still one. It's approximately one normal trade, but it's obviously not good. And it's always easier to wait for the signal bar. I think I do this often. I take the limit order trade or the buy the close trade in a climax because I'm not really comfortable entering without a perfect signal bar. So we get consecutive climaxes, and I'm thinking, I know that a bounce is likely at some point soon. But what if I get the climax and then and I don't get a perfect signal bar, and then we get 2 consecutive bars, but they both have reasonably sized tails. Do I buy below those bars? Like, what do I do there? Unless I only know the setup if there's a perfect signal bar. So that puts me in a tough spot and makes me take these these lower risk entries because I'm thinking, okay, we're at a reasonable level after consecutive climaxes. So let me just take the trade so that I don't miss it. And I think what I need to understand is that buying above a bad bull bar is better than buying this close. I think in this case because it's a bear trend. So I'm not even seeing it start to reverse. So instead of buying this low or buying this close, if I don't get a perfect signal bar, even if it's a small bull body or a small bull doji, buying that close is better than buying this one. Like even right now, if I'm just waiting for any bar to buy above, I'd be buying above this one here, which is a way better price than I got, and I would be staying out of this strong sell-off. So I think I'd have to get better at that because taking these entries and taking these losses when they're unnecessary, that is these ones I can live with, and I think they're okay. I can still do well despite these trades. But these ones are very avoidable. I can't keep taking these, regardless of what happens here. These are tough ones, and I think they're very avoidable. So we'll see what happens here. It's consecutive climaxes, so a bounce is likely at some point, which is why I bought it. But I think it's too early to buy with the limit order. Okay, I bought 5 more shares above the bull signal. So now I'm in 10 shares right at the same price above the bull signal. So I could have done that without buying this close. Could have just waited for the signal bar and bought 10 shares there. So I put myself through unnecessary risk here. So now I think this is a reasonable trade. Risking full size $10, stop below the signal bar, but consecutive climaxes down, breakout below new low, below yesterday's low. So I think it's a good setup. Looking to get out 5 shares at this low, betting that would close the gap, and then I'll look to get out the other 5, hopefully at the high of the sell climax. Got filled on my first target. It may take 2 legs to get up there, so I'm not sure if I want to sit through another leg. Move my order down from the high of the sell climax. We raced up to try to get there and then sold off aggressively, so it might need to pull back first before getting there. So I'm just looking to get an extra 20 cents from my first target, and then I think there are buyers below, but I don't know how deep the pullback is, so I just want to exit here if I can and then reevaluate and see what the best thing to do is. I'm deciding if I should put my order out to exit with a small profit or if I should just let the bar close. Oh my god. Alright, well, I guess I'm out then. I was gonna say, if I wasn't trying to make up the loss from earlier, if I was in this trade right now, I just wait for the bar to close and see what to do. If it's not a good sell signal, I would stay in. Because that's the setup. It's a swing setup to the high of the sell climax. So if this is not a good sell signal, then I shouldn't be exiting. And so I caught myself moving my order down because this bar was selling off, but that's not the plan. So in that moment, I said, I should be waiting for this bar to close. Let me move my order back up. And then it just filled me. So I guess I'm out now. So now down 274 on the day. But I didn't manage this properly. It should have been, based on how this bar closed, it's not an exit. So I should still be in technically. So could have managed that better. But during the trade, I was thinking, what do I feel like doing? And what would I do if this is my first trade of the day? And I think that's the decisions that I make when I'm down or when I'm thinking about money. They all seem like reasonable decisions. It's only after the trade that I realize that they're not reasonable. And I think, how could I have been thinking that? That's obviously not the way that I know I should trade. But in the moment, it feels like a reasonable thing. It seems like a logical thing to be thinking. And so the only way I can combat that is by thinking, this is my first trade of the day. What should I do? because I know that what I think during my first trade of the day is very different than what I think if I'm just coming back from a loss. And I think they're both very logical. They both seem like very logical things in the moment. Um, and so it's hard to catch yourself. It's hard to catch myself if I'm just thinking, is this the right thing to do? My answer is yes. In both scenarios, my answer is yes. It's only after the trade where I realized that it wasn't. And so I can that in that moment where I started to move my order back up, that was me thinking, what would I do if this is a standard trade and is my first trade? I'm not down anything. What would I do? And the answer was I would leave my target where it was and wait for the bar to close. And so that's when I made that decision in the split second, but it was just too late. So I really have, and that seemed to work. It seemed to work to compare it to my first trade, and that gave me a more objective view of what should be done here. So I'm still happy with the trade. Well, actually not. I'm not happy with the first entry. I'm happy with the second entry. I should have waited for that. Um, but I think there is still a buy somewhere here. I think there are buyers below, so I'll buy again if I feel like something sets up. I do think that this is the low for the next couple hours, and that the first reversal down will be bought. So I will look to buy lower. I sold below this bear bar. Move up, try trading range, breakout, and failed breakout, second entry short. So I thought it was reasonable to look for a test down. So the entry bar doesn't look as good as I would like, but I do think that this is a reasonable trade. So I could get out break even here, but I feel like it's a reasonable thing to do. Second entry sell, micro double top after a breakout from a tight trading range here. So I'm gonna keep it, see what we get. I got 1 cent away from my first order. That'd be nice to get off. So I've got off half there, and I'll get out the other half near this low. This was a second entry sell, but not a good one. But it was still a micro double top and second entry sell. So I have my order right at that low, thinking that we could get down there and test there. All right, all out. Up $6. Wow. I'm really happy with that one. Happy I took it. Thought it was a reasonable thing to do. Maybe these two orders are too close together, but man, that's a good comeback.